Let's review a file that we recently closed in West Hempstead, Long Island. This is what the property looks like. It's 4 bedrooms, 3 baths. It was listed for $900,000 and it was sold for $935,000, right? And here are the specs for the file. $935 purchase price. The client put down 20% down payment, $187,000. He had no monthly debt, right, or very minimum, $44. We typically see it much higher than this. This includes your credit cards, your student loans, lease payments, right? Any of that, your monthly liability will be in here. And there was only one borrower on the file, and his credit score was 786. Household income, $380,000. Definitely on the higher end, but this is not because of his tax returns. This is because he provided his 12 months bank statements for his business, and we use the income from that, right? So this is a non-QM loan. So we're going to show you what non-QM loan means. And the property taxes were around $10,000, and his home insurance per year around $2,800. APR on this file was 6.68. And the loan type that we're talking about, this is a bank statement loan. You do need 700 credit scores. He had higher than that, and 20% down payment. That's what he put down. And we're not looking at your tax returns, right? We're simply looking at your bank statements and giving you a qualification based on that, okay? Now let's review the CD for this. So the loan amount was $748,000 and the interest rate was 6.375. There was a reason for this as well, because he chose to pay the broker's fee for this. If he didn't want to pay this fee, then the rate would have been around 7.25 for him, okay? But he chose to go on the lower end, pay the upfront cost. So the principal and interest for this file was $4,666. And can this amount change after closing? The answer should be no. Usually, if it's going to be a non-QM loan, then you see a prepayment penalty, typically, for the first 5 years. But if it's going to be a primary residence, then a lender may waive that, which happened in this case. And there's no balloon payment, so it's a 30-year fixed loan, okay? There is an escrow being held, so the property taxes and home insurance can be paid. So for this client, total payment is going to be $5,787. His closing cost was nearly $45,000, nearly $46,000, and his cash to close was $183,000 there. Okay, origination charges total around $17,000. Again, this could be much lower if he chose to go with the higher interest rate, okay? And section B, these are the services that he did not shop for. Appraisal fees, credit report, nearly $800 there. Your title, this is what your title is charging, nearly $4,100. Your government, what government is charging, it depends on which county, nearly $7,500 there. And prepaids, these are the services that he paid for, including home insurance, nearly $10,000 there, okay? Escrow account that we're starting off with, nearly $2,200 there. And you can see that his total closing cost was $45,000, which out of that, he did pay $46,000 on the contract. Total down payment was $187,000. So the remaining balance that he had to bring to the closing table was $183,000 there. So if you're thinking about buying a property in Long Island, or if you have any questions regarding non-QM loans, please get in touch.